Now guys, we are going to discuss the agenda of this S&P 500 technical analysis. And in this agenda, the first point is the S&P 500 technical analysis on the weekly chart. Weekly chart means we are going to look into this, the big picture, and we will see whether the trend is the long-term trend, or if there is any change, or whether the market, the entire stock market, is going to survive or not. So we are going to analyze. See, there is this the important thing, okay, that we are going to deduce through this, the Dow Jones. Okay, so the Dow Jones on the weekly chart is going to tell us that what is suspicious. So weekly picture, what happens is that on this the weekly chart, okay, the noise is not there, or the noise is less, and we are able to see this the big picture. Okay, what is happening, where this the stock market is heading to, where the S&P 500, the Dow Jones and the Nasdaq, these indices are heading to, and accordingly we can plan our trades, right? Then guys, I will discuss in the point number 2 of this S&P 500 technical analysis, I will discuss the recession and the GDP data. So as I have shown you that this the GDP data, it was better than this the previous quarter, right? So how this GDP data is going to impact on the recession, whether there is any change in this the upcoming recession or not, right? And how soon we can expect the recession to hit, right? So through this, so we will analyze this the GDP data, and we will talk about this the recession. Now guys, then comes this the point number 3. In the point number of in this the point number 3, I will talk about this the S&P 500 support and resistance level. I will give you these the probable resistance levels and these the support levels, and also I will give you this particular zone. Then guys, in this the point number 4 of this S&P 500 technical analysis, in this the point number 4 of this agenda, I will talk about the S&P 500 technical analysis on this the daily chart. See, this was the weekly chart. Weekly chart means the hawk eye view, means the big picture, right? Daily chart means that we will come to know, or we will see, okay, what is happening on this the daily basis. This is the kind of candle. How this the one candle can change, okay, this is the movement. Then comes the probable movement of S&P 500 from December 27th, 2022, that is Tuesday, to December 30th, that is Friday. Once again, guys, Monday is holiday. 26th of December, that is holiday. So this is the probable movement of S&P 500 from December 27th to December 30th, 2022. So this will be the last part, and I will tell you that what we can expect in this the coming week. Although we know that most likely it is going to move up, but how it is going to move up, and whether there will be again, okay, any retest or not, because the S&P 500 has retested 4 times, tested and retested 4 times this the border. So how it is going to perform, how it is going to move in this the coming week. So there will be, okay, this is a short week of only these the 4 days. So how it is going to move in this the last week of the December. So this will be really, okay, this will be very, very interesting, okay, this particular week. Now guys, this technical analysis, it will be a bit lengthy. That is why I have created these the sections in this the technical analysis in this the video. Whichever section you want to watch, you can watch that particular section. Whichever section you want to rewatch, you can rewatch that particular section. And if you want to skip any section, then you can skip that particular part. However, you must know that this technical analysis, it is full of information. There is a tons of information. So each and every part of this the technical analysis is connected to this the other part. That is why I strongly recommend you to watch this the entire technical analysis. Now guys, before I proceed further, I would like to clear this thing, that this S&P 500 technical analysis is not a financial advice of any kind, in any form or in any manner. This S&P 500 technical analysis is not an advice for any kind of trade setups. And whether you are making 100% profits within a day, or whether you are losing 20-30% within a day, these profits and losses are all yours, because I do not know how you are going to interpret my S&P 500 technical analysis. Now guys, I am going to begin with this, the first point of our agenda, that is the S&P 500 technical analysis on the weekly chart. So here I will talk about the S&P 500 and the Dow Jones on this the weekly chart, and we will see that what is happening on this the big picture. What is this the big picture for this the stock market? So guys, this is the first point of our agenda, that is the S&P 500 technical analysis on the weekly chart. So this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week, right? And guys, once again, if you have not subscribed to this channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to join my YouTube community in order to get the daily analysis, the daily updates of the S&P 500, then there is the join button just below the title of this video. You can click on that, the join button, and you can join my YouTube community in order to get the daily analysis, the daily updates of the S&P 500. And if you look into this, the candle, the kind of candle, then this looks like a doji candle. However, it is not a doji candle. It is just a bearish candle. Yes, it resembles to a spindle. Okay, so whenever see this, okay, these are kind of spindles, okay, or these are dojis. So that simply means that there is a potential reversal. That is indicating a potential reversal. However, this is not a perfect spindle. This is not a perfect doji. That is why, okay, I cannot confirm whether there will be a reversal or not. That is why we will have to look into this, the daily chart. Okay, the candle on the daily chart and the movement on this, the daily chart. As of now, we are just going to assume it as a bear candle. Okay, simple, a bear candle and nothing else, right? But the most important part is the two consecutive closings below the moving averages. That is the important part. Okay, other than this, the shape of the candle, this is the important part. Two consecutive closings below these, the moving averages. And moving averages, if you see that there is no crossover, right? So this is the important part. This clearly means that now the S&P 500 is bearish because there are these the two consecutive closings below these the moving averages. Okay, so this information will help us to deduce the probable movement of the S&P 500 in this the coming week, right? So that is okay, this thing here. Now, other than that, okay, I want to show you, okay, this is the Dow Jones, right? This is the Dow Jones. So if you look into this, the Dow Jones, the previous candle, okay, this is the last, this is the weekly candle. In case of the S&P 500, this is the last candle. It was a bearish candle, okay, kind of not exactly doji, but a kind of a spindle, okay. But in case of the Dow Jones, this is clearly a bullish candle, simple, a bullish candle, okay. And also this bullish candle, okay, it is indicating that it has survived. These are moving averages. It has survived. Okay, this is the cloud. It has closed inside the cloud. Okay, so we will talk about these are technicals, okay, little later. But as of now, this is a bullish candle indicating bullish sentiments through this Dow Jones, right? So now let's first do this technical analysis, okay, and then we will look into these two things, okay, S&P 500 and this Dow Jones. Now in this the technical analysis, first comes the Ichimoku cloud. If you notice that the S&P 500 has closed below the Ichimoku cloud, right? This means that the S&P 500 is bearish through the Ichimoku cloud, right? Now the second thing is this is the Bollinger Bands. This is the median of the Bollinger Band. This is the lower band of the Bollinger Bands. This means that the S&P 500 is trading in between the median and the lower band. This means that the S&P 500 is bearish through the Bollinger Bands, right? Then comes the moving averages. When you look into these, the moving averages, clear fan out, no crossover. Secondly, the S&P 500, two consecutive candles, weekly candles closed below all of the moving averages. This means that the S&P 500 is clearly bearish through the moving averages, right? Now, other than this, okay, we have some other technical indicators. As of now, these all are saying that the S&P 500 is bearish. Now, when we look into these the other technical indicators, so we have this the MACD. MACD is more than the signal. This means that the S&P 500 is bullish through the MACD. However, both MACD and the signal both are negative. Both are negative. This means that in the long term, MACD is still supporting the bearish trend. There is no change. Okay, but only this the directional. Okay, this is the directional bullish movement. Okay, that is what is actually it is creating this the problem. This is not allowing the S&P 500 to come down. Okay, that heavily. But if there comes like one or two more these are bear candles, then there will be a crossover in the MACD and then absolute bearish back into this the long term bear trend, right? Anyways, as of now, so we are going to count the MACD. Okay, means we will say that the S&P 500 is neutral through the MACD. Okay, or you can count it as directionally bullish. Okay, but it is not absolute or heavily or even the light bullish. It is just directionally bullish. Then comes the stochastic RSI. When you look into this, the stochastic RSI, K channel is less than the D channel. This clearly indicates that the S&P 500 is bearish through the stochastic RSI. Then comes the divergence. When you look into this, the divergence is normal. It is not creating any problem. Okay, that's fine. Then comes the volatility. If you look into the volatility is like, yes, it is around 85-90% of the all-time high levels. So the S&P 500, okay, it is still volatile, right? And other than that, okay, everything else looks good. So now what we have noticed is that technically what we have noticed that first of all, S&P 500 is bearish through the Ichimoku cloud. S&P 500 is bearish through the Bollinger Bands. S&P 500 is bearish through the moving averages. S&P 500 is bearish through the stochastic RSI. S&P 500 is either neutral or directionally bullish through the MACD. This is the picture. This is the picture. Okay. Other than that, S&P 500 is it is still a little volatile. Okay. So now what it says that yes, 90% it is bearish. Technically S&P 500 on the weekly chart is 90% bearish, or 85 to 95 or 85 to 90% bearish, but it is not absolute bearish because MACD is still holding. MACD is still holding, means S&P 500 is still holding through the MACD. That is the reason why it is not absolute bearish, right? But it will be once there comes these one or two candles, then it will be, right? So that's not a big deal. Now, guys, this was that. Okay, this was one thing on this in the case of S&P 500. But what we need to see or what we need to check is okay, this the Dow Jones also, because it is the Dow Jones that is not or that is helping the other indices or the entire stock market to hold and to not give up. It is the Dow Jones that is responsible for this. So now what we are going to notice is that the Dow Jones, okay, indeed it tried to come down, but it holded very well, okay, in this the cloud itself, very well, okay. However, the closing came inside the cloud, within the cloud, okay, because see, on like three times it came to hit this the moving average as well as okay this the cloud here. So through these the daily updates, I've informed my YouTube community member that see, this is where if the Dow Jones comes down, then it will come down to this level, okay, at most like 32,575. So as of now, there are extremely thin chances that the Dow Jones will be able to breach the 32,575, and even if it is able to breach, then also it will close above 32,575. That was the reason yesterday in my final update to my YouTube community members, I mentioned that the absolute fall in the stock market on Tuesday and Tuesday onwards will come surely if Dow Jones closes below 32,590, because 32,590 it was the level that we have calculated through the daily chart and the weekly chart. So there was this the level just above 32,575. If the Dow Jones would have closed yesterday below 32,590, then definitely a fall, a very heavy fall. These kind of very heavy red candles. That was 100% certain, right? So this is what I've informed this information I gave to my YouTube community members. Okay, but as of now, what has happened is that the Dow Jones, number one, it has closed as bullish. There is a bullish candle, okay, on this the weekly chart. Secondly, it has closed inside this the Ichimoku cloud. See, there are these the two things. Number one, that it failed to close below the cloud. That is fine. It failed to close below the cloud. The second thing is that it failed to close above the cloud. This means that as of now, the Dow Jones is neither bullish nor bearish. Neither bullish nor bearish, and we do not know what will be the true colors of the Dow Jones, whether it will go bullish or whether it will go bearish. As soon as it closes above the Ichimoku cloud on the weekly chart, means the next week, okay, this means that yes, now the entire stock market has some potential to move up. If it comes down and if it clears this the Ichimoku cloud on this the weekly chart, then this means that now the Dow Jones has cleared its intention, it has given up, okay, and no more upward movement, or if there will be any upward movement, that will be very limited, and that will form a lower high. We will short and it will fall and we will make money. Simple logic, no rocket science, right? So this is all with this the Dow Jones. And if you have subscribed to my channel, then I guess a month ago, okay, I mentioned this thing that see, this is the upward movement you are seeing, okay, that the Dow Jones has breached this the Ichimoku cloud on the weekly chart, and it is indicating a long-term bull trend. This is a trap. This is a perfect and absolute trap, okay, absolute trap. The reason was that because at the same time the Nasdaq and the S&P 500, both of these indices, the Nasdaq and the S&P 500, failed to clear or failed to hit the cloud even, right? And at the same time, we have seen that the Dow Jones, it managed to close above this the Ichimoku cloud. That was the reason it was a confirmed trap. It was an absolute trap. and I've informed you very well in advance 1 or 2 months ago. Okay, this particular thing that see this is happening. This is a trap. This is not the time to go long. Now, guys, what we have noticed is that in this the S&P 500, there are two consecutive. These are the weekly candles closed below. Okay, these are the bearish candles indicating bearish sentiments. S&P 500, it is 85 to 90% bearish, but not absolute bearish. But this is also enough. Okay. Secondly, the Dow Jones has closed inside the cloud, indicating that it is neither bullish nor it is neither bullish nor bearish, and it can move either this side or this side. And as of now, we do not know. No one knows. Okay, other than these the market movers. Okay, these the market manipulators. No one knows. Okay, what will be the near future of this the Dow Jones? But yes, what we know about the Dow Jones is, and for the entire market, entire stock market, if the Dow Jones is able to close above the boundary of the Ichimoku on the weekly basis next week, in that case, what will happen? In that case, there will be some of these are bullish sentiments. Okay, that we can see in the first week of January and also in the second week of January. But if the Dow Jones closes below this the Ichimoku cloud in the next week, okay, in that case it will be clearly bearish. Entire market will fall, entire stock market will fall. Okay, fall, red and red candles. If the Dow Jones is able, or if again the Dow Jones closes inside the cloud on this weekly chart, then it will be more and more suspicious. And that should indicate that you must be extra careful, okay, because then you will see very sudden moves up and down, very heavy and the very sudden moves. So that is why, okay, you can subscribe to this channel, so that, okay, when I upload this the next weekly technical analysis of the S&P 500, then you will come to know, okay, whether this is happening or not, right? So in this, now for this S&P 500, so this thing is clear, right? So now, guys, let's move on to this, the next part of this, the technical analysis of this, the S&P 500 technical analysis. And the next part, the second part of the agenda is the recession and the GDP data. So let's discuss, okay, this is the GDP data impact, and this is the recession, the technical recession and the absolute recession. Now, guys, there comes is the second point of our agenda, and this the second point is the recession. It is the recession and the GDP data that was published recently, the GDP data. Okay, other than that, the PCE core PC data, okay, that was also published on this the Friday, right? Now, guys, before I begin, once again, if you have not subscribed to my channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to get the daily analysis, the daily updates of the S&P 500, then there is this the join button. Just below the title of this video, there is this the join button. So once you click on this the join button, you will be able to join my YouTube community, and you will get the daily analysis, the daily updates of the S&P 500. So recession, as we know that after the comments of the Fed chairman that there will be rate hikes, back-to-back rate hikes in the year, in this the financial year 2023, there will be these the back-to-back rate hikes, but there will be no rate cuts. No rate cuts. Okay, this clearly indicates that the Feds are further going to slow down the economy. Okay, the economy will be, okay, it will be further, okay, it will be slowed down. Secondly, because there will be no rate cuts, this means that, see, this is the no rate cuts, okay, this is for the entire year 2023. This was, okay, so the Fed chairman himself has, he has mentioned this thing that no, there will be no rate cuts, okay, in the year 2023. This means that the interest rates are further going to move up. Okay, interest rates are further going to move up. Because the interest rates, okay, okay, will be increasing. This means that the banks will be charging more interest, okay, on all of these are kind of loans, okay, personal loan, business loan, home loan, car loan, vehicle loan, means XYZ, all of these are loans, okay, because the loans will be very costlier. That is the reason the people and the businesses, they will not be going for the loans, and because the people and businesses, they will not be going for the loans, this means that earlier someone, okay, who used to buy a car on the loan, now this person is not going to okay, so let's say there was this the Tesla car, okay, and the cost of this the Tesla car, okay, it was $100,000. Earlier this a Tesla car, okay, it was available, okay, on this the loan, means as of now also it is available on this the loan, so anyone can go, okay, and buy this the Tesla car, okay, on this the loan. But now because the loans are very okay, these are very much costlier, this means that people, okay, or this the person who was looking for this the Tesla car that was worth $100,000, now he'll be looking for some alternate option, okay, for example a car that is only worth like $50,000, okay, $40,000 or something, okay, because then this the loan will be, okay, the total value of the loan, okay, it will be less. Secondly, this the repayment, okay, the installment, okay, of that the loan, the interest okay, that will be again, okay, it will be lower. So that is the reason. Okay, now what is going to happen? This is simply going to slow down everything. Okay, so what will happen, that there will be the impact on Tesla. Okay, see, this is just an example. There will be the impact on Tesla, that because now the Tesla will see that there is, less revenue because of less sales. Okay, because there is less revenue, because of the less sales means less profit. Less profit, okay, means the less valuation. Less valuation means the stock price of Tesla, okay, it will come down. Simple. Because Tesla, okay, it is a prime stock, okay, in S&P 500 and the Nasdaq. This means that it will create, whenever it comes down, then it will create, some impact. This is a bearish impact, okay, on these indices, right? And that will be seen in this the entire stock market. So this is the chain. Okay, this is a cycle basically, and this is how it works. So this was just an example. So this is all because the Feds are going to raise the interest rate. Similarly with the home buyers. So if you were planning to buy a home, now you will say no. Okay, as of now, okay, I'll go for the rent. Okay, and later, okay, once everything cools down in 1, 2, or 3 years, then I'll go for then I'll go for the home. Then I will buy the home. So as of now, interest rates are extremely high, and sorry, not just high, but this will be much higher because Feds are further going to raise the interest rates. And the purpose of raising these interest rates is to slow down the economy. Once again, slow down the economy. Why the Feds are slowing down the economy? Because the jobs available and the job seekers, there is a huge gap between the jobs available and the job seekers. There are more jobs available as compared to these the job seekers. That is the reason companies are willing to pay these the higher wages. Because companies are paying the higher wages, people, they have the money in hand, they can buy, okay, these the items that are available in the market, okay, for for any price, for this the increased price. That increased price is actually causing the inflation. That is the problem with the inflation. So Feds are simply trying to bring down the inflation by slowing down the economy, so that the gap between the jobs available and the job seekers, this can be, okay, reduced heavily. And then there should be this the opposite case, where there are less jobs available and more job seekers, so that the people, they have the money, okay, means they have only, okay, that much money that they can use, okay, in order to survive, or in order to like just for this okay, means they should not be able to buy these unnecessary items, or these these the costly items, etc. That will simply help, okay, help in bringing down this the inflation. That is the simple part, right? So this is just, okay, I've repeated, okay, this thing again and again many times. Okay, and again, guys, do not forget the food. Okay, food is what is going to create this a real problem. Okay, food. Yes, you heard it right. Food. Why? Okay, why the food? Because now, because of this the climate change, okay, there are these are droughts in the okay, droughts or floods. Because of these the droughts or floods, okay, there is this the very heavy impact on the production of the food. Now, because there are 8 billion people in the world, and they need to be, okay, feed, they need the food, and this the production of the food, okay, it is decreasing rather than increasing. It is the production of the food, it is decreasing because of these the excessive, okay, droughts, floods, fires, means XYZ. So these are, okay, these are some of these the climate, okay, climate change something. Okay, so that is the reason, because, okay, there is this the food, okay, the production of the food is decreasing, food prices are increasing, and that is why, okay, people, they are willing to pay any price for the food. Okay, and this is natural because we need the food, right? So that is why the inflation is still high. Because of that, the inflation is still high, and Feds are simply trying to cool down this the entire situation. They are simply trying to bring it down, the inflation, bring it down. But soon they will realize that they cannot bring down the inflation, because now whatever this the geopolitical situation, sorry, not actually the geopolitical situation, that is one thing, the Russia and the Ukraine. Okay, these are the major exporters of the wheat. Okay, the primary, okay, this of wheat and the rice. Okay, these are the two primary, okay, okay, this is what the entire world eats, right? Wheat and the rice. So first thing, okay, Russia and the Ukraine, okay, this thing. The second thing is that the climate, okay, itself, in all of the countries, Asian countries, South American countries, okay, North America, Europe, everywhere the climate change. Okay, so food prices will remain high. Okay, no matter what, it will remain high, and soon, okay, the Feds, okay, they will realize that that no matter what, okay, even if they go for very, very high interest rates, okay, then also food prices will not be coming under control. Yes, all other prices, like, I've given the example of Tesla car, okay, other unnecessary items, are home, okay, these, yeah, definitely, okay, these prices will come down, and they are coming down, because the recent data shows that there were less home buyers as compared to the last year. Okay, now every month, okay, there are less and less home buyers. People are not buying the homes, people are not buying the house. Okay, and the same thing is happening, okay, with these expensive cars. Okay, these, I mean, whatever is expensive, whatever is unnecessary, the same thing is happening there, right? So that is, yes, that can be controlled, but the food, no, it cannot be. Okay, so soon the Feds will, okay, they will realize, and that is the reason the Fed chairman has mentioned that, see, in the financial year 2023, in the financial year 2023, there will be only rate hikes but no rate cuts. This means that everything will be costly. Okay, companies, they will be earning less. Because the companies will be earning less, this means that the valuation of the companies will decrease. Because the valuation of the companies will decrease, this means that the stock price of the company will fall. Because the stock price of the company will fall, these are the companies who are the major contributors to the indices, like Dow Jones and SP 500 and Nasdaq and all other indices. So the indexes, okay, these indices will come down. Because these indices will come down, that is the stock market, right? So the stock market will fall, it will come down. Okay, so there will be a severe recession from the year 2023, from the year 2023 to the year 2025. Okay, this will be a great recession, okay, this time. So this was one part. Now let's discuss this, the GDP part. Now this is the GDP part. Okay, if you notice, this was my update on December 22nd. Yep, December 22nd, pre-market update to my YouTube community members. So the GDP, it rose an annualized 3.2% in quarter 3 to 2022. The previous, for the quarter 2, the GDP was 2.6, I guess, 2.6 for quarter 2, and the Wall Street has expected it to increase, okay, to increase by 2.9%. But the GDP, okay, it came out more than 3.2%. This means that the economy is still holding. Why the economy is still holding? The economy is still holding because the jobs available and the job seekers, okay, there are more jobs available as compared to the job seekers. More jobs available, right? And this is what actually Feds are trying to do. They are simply trying to suppress these the jobs available, because when the interest rates will be high, businesses, okay, they won't be able to take these the loans, they won't be able to expand, and then overall there will be, okay, this the recession. Okay, then businesses, they will make less money, they will fire the employees, less jobs will be available. When the less jobs will be available, then this the gap between the job seekers and the jobs available, this will be reduced. Then the story will be opposite. Now less jobs available but more job seekers, right? And this is what actually they are trying to achieve. So that, see, ultimate goal is to bring down the inflation. That's it. Okay, so this is the only way to bring down the inflation, nothing else. Okay, that is the reason why the GDP, okay, this is the number, it was more than the anticipated and the previous one. Wall Street has expected 2.9%. Previous one was 2.6%. This time it was 3.2%. Because the economy is still holding, this is going to make Feds unhappy. Yep, unhappy, right? See, generally when this the GDP grows, GDP increase. Okay, so that is a good news for everyone, and even the Federal Reserve, okay, the Feds, okay, they are happy, right? But this time they are not happy. They are unhappy. Okay, the GDP has the GDP has grown, and this time they will be unhappy. Why they will be unhappy? Because the growing GDP means that the inflation is still holding. Inflation is already 4 times of this the acceptable rate, 4 times, 400%. Okay, it is of this the acceptable rate. So the inflation, sorry, not 4 times, it came down, and it was like, yeah, it was 3.6 times, approximately 360 times, 360%. Okay, this is what is going to, okay, irritate these the Fed. So they will say that even after raising the interest rates, the GDP is okay, it is still growing, means people are still getting the jobs, means people are still spending the money. And this must not happen. People must not spend money or more money, okay, so that they can bring down the inflation. This means that this better than anticipated GDP data is simply going to force force the Feds, and Fed can take negative. Okay, take this news negative because Feds are trying to slow down the economy, right? And this means that this better than GDP data is further going to compel, further going to force the Feds to take more, aggressive steps, more aggressive, to go more aggressive, right? So that they can ensure that the GDP, it will drop. When the GDP will drop, means that the job seeker jobs available and the overall production in this the market, it means everything it will slow down, and that will help the inflation to come down. Okay, this is the goal. Again, the Feds are trying to cool down the inflation, to bring down the inflation back to 2%. As of now, this is 7% and holding. Okay, they are trying to bring it back under 2%, right? So this is all of this, the exercise, the increase in the rate hikes, no rate cuts. Okay, this is all because of that. Now, because Feds will be more aggressive, that is why the market is fearful. Means the stock market is fearful, and that is why we are seeing the heavy candles. Okay, see, this is just the beginning. This is just the beginning. Okay, in this the recession, I mentioned that we are going to see, if everything goes as usual. Okay, if everything goes normally, then we can see 2500 S&P 500 hitting 2500 either by the end of 2000, not end, anytime like by mid of 2023 or by end of 2023. 2500, it will be in the picture. If there comes a fall, a slow fall, in that case, in the first or the second quarter, we will see that the S&P 500 is hitting 2500 or 2200. Yes, 2500 or 2200. Okay, as of now, this looks like impossible, but yes, that is really possible. This is the stock market. Stock market can tank by 60, 70, 80%. Okay, not a big deal. So guys, this was all about the GDP and this the recession. Now let's talk about this, the third point in our agenda, and the third point is the support and resistance levels for the S&P 500 in the coming week. Let's see what will be the zone of the S&P 500, where we are anticipating the movement of the S&P 500 will be confined to, what is going to happen to the S&P 500, etc. Okay, all of these aspects and all of these are factors. So once again, guys, if you have not subscribed to my channel, then please subscribe the channel and click on the bell notification icon. And if you want to join my YouTube community, in that case, you can click on this the join button that is provided just below the title of this video. This is the join button. So guys, before I give you these the support and resistance levels, I have this very important information to share with you, that if you want to get these the daily updates, the daily analysis of the S&P 500, in that case, you can join my YouTube community. And in order to join my YouTube community, you can simply click on this the join button that is there just below the title of this video. So when you click on this the join button, so once you click on this the join button, then this pop-up will open. In this pop-up, you will see that all midweek updates. All midweek updates means the daily analysis, the daily updates of the S&P 500 from Monday through Friday, each and everything from Monday through Friday. And if you see that my members, for last many months, they are getting these the daily updates, the daily analysis of the S&P 500 from Monday through Friday, each and everything, the videos, the text, notes, pre-market update, the pre-market update, the first, second, third, fourth update, the important updates, the final update. So whenever you are ready to join, whenever you want to get these the daily updates, the daily analysis of the S&P 500, you can simply click on this the join button and you can join. And guys, one more thing, that once you have joined my YouTube community, then you will have to visit my YouTube channel page, and there is this the community tab. All of the updates will be there in this the community tab. So guys, once again, whenever you want to join my YouTube community, you are welcome. Now guys, there comes this the third point in our agenda, and this the third point is the support and resistance levels for the S&P 500 for this the coming week. Now in this the coming week, what we are going to see is that, first of all, we must agree and we must accept the fact that the S&P 500 has survived the border. This is clear, no doubt. S&P 500 has clearly survived the border. Secondly, the S&P 500 has survived the Ichimoku cloud. It has closed on this the daily basis. It has closed above the Ichimoku cloud. So it has clearly indicated, or it has shown the intention, means the S&P 500 has shown its intention that the S&P 500 want to move up before it can give up, before it can come to this in this the recession, right? So that is the reason. We cannot ignore this fact that it has survived above this the border. That is why again the border will remain in the picture. The border will be there as is, no change in this the border, okay, until this the next week, okay. However, there will be change in this the border, okay. That will be the change will be only on this the next Friday. On this the next Friday, that will be December 30th, the border, okay, it will change to 3765, and that is again our support level, okay, a very very good support level. So the border will change to 3760, okay. This is the next Friday, okay. Now, as of now, okay, at most, even in the best case scenario, S&P 500 can move up to this the zone, up to this the zone of 4035 in the best possible scenario, okay, or exceptional scenario. Then we have 3990, again a very strong, okay, or this is a very good resistance. Then we have 3960 resistance, good resistance. Then we have 3937. The zone of 3937 is very very critical, very very strong, as well as very very critical, okay. Any upward movement will be confined, will be restricted by the zone of 3937, right? If the S&P 500 moves up, then that will be restricted by the zone of 3937, and again this the lower high will be formed around, okay, in this the either in the zone of 3937 or around this the 3937, right? Then comes the next one, that is at 3907. So 3907 again, okay, yep, there are fair chances that when the S&P 500 it moves up, then it can move up to hit the 3907, okay. These are fair chance. It may or may not hit the zone of 3937, that's a different thing, but yes, there are fair chances that it can hit the level 3907. Then comes the 3884. 3884, we can clearly see that the S&P 500, okay, it hit the last week, okay, fine. Then we have the 3840. Again, the 3840, okay, it is there in the picture. The zone of 3840 is very very strong zone. And last week, if you remember, last week I told you that even if the S&P 500 comes down, even if it breaches the zone of 3840, then again it will come back. It will come back to respect the zone of 3840. And if you see Tuesday, it again, okay, it was there. Then it means the zone of 3840. I told you that 1, 2 or 3 days it will be there. It will trade around the zone of 3840 before it can either move up or it can go down. Okay, that's a different thing. But it for 1, 2 or 3 days it will be there. It will be just hovering around the zone of 3840. Again, that is there because as of now the S&P 500 has closed inside the zone of 3840, okay. Then comes the next one is the 3805, that is the border. Then we have 3790. So the border is this. The border will be counted from 3805 to 3790. This is the border, right? This is going to act as support, a very good support. 4 days, 4 times S&P 500 it was able to survive, okay, above this the border. Then comes the next one, that is 3760, okay, again a good support. If you see that on Thursday it came down, and then just means it barely, okay, it means it came down to 3764. We have 3760, and then there was a reversal, intraday reversal, heavy reversal, okay. Then we have 3735, the zone of 3735. 3710, yes, 3710 is what, okay, that is going to act as very very good support, very strong support for the S&P 500. Then finally we have 3675, okay, 3675 will be again very strong support for the S&P 500. In the coming week, I'm not expecting the S&P 500 to go below 3675. Okay, there will be only this is the exceptional case. Okay, if that happens, okay, and if you are my YouTube community member, okay, if something happens, then I will tell you. Okay, if whether we are expecting or not, whether intraday it will be able to survive or not. Okay, how we are going to manage that. Okay, this particular day or this particular trade. Or okay, this thing. And then okay, yep. So now what we can see is that again in the coming week, the movement of the S&P 500, first it will be limited from the border to the zone of 3937. From the border to the zone of 3937. This the border, it will change, okay, or there will be a little change in the border. The border will remain same, but then in one exceptional case, okay, particularly on Thursday and Friday, okay, we can see that okay, there will be a possibility, okay, to come down to 3760, okay, if it want to come down 3760. Otherwise, okay, everything will remain again above the border, in between the border and the zone of 3937. Okay, in there between the border and the zone of 3937, we have 3840, very very strong zone. Okay, then we have 384. Okay, that is normal resistance. Then we have 3907. Yes. So the S&P 500, whenever we see a retrace, S&P 500 may or may not hit this the zone of 3937. Rather, it can hit the 3907 and it can come down. Okay, so that will be that. So that will be, this is the another part. Okay, as of now, this is again highly likely. Again, highly likely. Okay. One exceptional case, if there comes very heavy manipulation, because see, this is the last week of December. Last week means the closing of the year, last week. Okay. So again, the center rally, this, see, as of now, this the stock market is surviving. S&P 500 has survived. Why? Why it has survived? It is because there are these the bullish sentiments. There are these the bullish sentiments. And why there are these the bullish sentiments? Bullish sentiments are on the hope of the center rally and nothing else. That there is some hope that yes, the center rally can still happen. That is why, okay, the S&P 500, it has survived. It is holding S&P 500, right? And this is the entire stock market. See, even in this the best case scenario, S&P 500 can move up to the zone of 3937. Then it will struggle. Okay, a bit. Now, see, without struggling, S&P 500 cannot move to 39904035. No, that is not possible. It has to struggle, and it will struggle at least for a day, for 2 days. Okay? It will struggle there, and then only, okay, once it is able to close above the zone of 3937, then only it can move up. Okay, but again, guys, this is not the time to go long. This is not the time to think bullish. This is the time to think bearish, because everything is now bearish. We are clearly, okay, we are heading to this the recession. So any retrace, this is going to act as an opportunity to go bearish. And see, once again, guys, recession is the best time to make money. Not just, okay, money, but a lot of money. That is the recession. Okay, that is what the recession is for, to make a lot of money in the stock market. You see, in this the economy, we will see that everything has slowed down. Okay, things are not good. But in the stock market, we will see big red candles, heavy red candles. That is the time when we can make heavy money, very good money. So if the S&P 500 is able to survive, see, again, there are only 4 days. This is a short week. Okay, Monday is not there in the picture. Only 4 days: Tuesday, Wednesday, Thursday, and Friday. So in this a short week, if the S&P 500 is able to close above the zone of 3937, then only it will be able to move towards 3990, and this is the 200-day moving average and 4035. That's it. Okay, then it will form this the lower high. Okay, either in the zone of 3937 itself, or means anything above 3937 is going to act as lower high, in simple words. Okay, let's just keep it simple, right? Now in this the downside, whenever it comes down, first it will find very good support, okay, here at 3760. Okay, then we have 3735, the zone, and then the 3710. First, okay, this will be, okay, this one, okay, from 3760, okay, to there. And then whenever it comes down, then 3710, okay, it should be able to hold. Okay, if not, then 3675. See, anything beyond this the zone. Okay, border, this is the border, this is the zone of 3937. Okay, our border is 3805. Okay, 3805 to 3790. In between the border and the zone of 3937, anything beyond, either bullish or bearish, okay, it will be an exceptional event, and that will trigger, okay, that kind of sentiment, okay, that we will see on this the daily basis. Okay, once again, if you are my YouTube community member, okay, then I will tell you, okay, like what is happening, or if there are any exceptional movement, right? So once again, guys, if you are not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to get the daily analysis, the daily updates of the S&P 500, then you can join my YouTube community. And for that, you can click on the join button that is there just below the title of the video. So guys, this was the support and resistance level for the S&P 500. Now let's move on to the fourth point of the agenda of this S&P 500 technical analysis. And the fourth point of our agenda is the S&P 500 technical analysis on the daily chart. So see, earlier in the first point of the agenda was the S&P 500 technical analysis on the weekly chart. Weekly chart means the big picture. Okay, this is the big picture, the hawk eye view. Now this the S&P 500 technical analysis on the daily chart means we will see that what we can expect from the stock market, from the S&P 500, okay, in the coming week, what the technicals are saying, whether the technicals are bearish, okay, bullish, etc. So let's move on to the fourth point of our agenda, that is the S&P 500 technical analysis on the daily chart. So guys, we are here and this is the fourth point of our agenda, and this fourth point of the agenda is the S&P 500 technical analysis on the daily chart. So let's see, okay, technically how the S&P 500 is doing here, whether it is bullish, whether it is bearish, okay, whether it is going to survive or not, okay, what the stochastic RSI is saying, MACD is saying, okay, all of these are technical. So guys, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And if you want to get the daily analysis, the daily updates of the S&P 500, in that case, you can join my YouTube community. And in order to join my YouTube community, there is the join button, JOIN join button, just below the title of this video. So guys, in this the technical analysis of the S&P 500 on the daily chart. First comes the Ichimoku cloud. If you notice that surprisingly S&P 500 is what it was able to close on the daily basis. Okay, in this the previous week on the daily basis above this the Ichimoku cloud. This means that the S&P 500 is clearly bullish through the Ichimoku cloud because it has closed above the Ichimoku cloud, right? Then comes the moving averages. Now, this was a very, very important thing, okay, that has happened in the previous week. There was a confirmed crossover after 2 months. After 2 months, there was a confirmed crossover in the moving averages, and that is indicating this, okay, this crossover is indicating that now the S&P 500 is bearish through the moving averages. As of now, clear fan out in the moving average is bearish. Closing of the S&P 500 below the moving average is bearish. This means that the S&P 500 is bearish, absolute bearish through the moving average, means the EMS, right? Then comes the Bollinger Bands. This is the median of the Bollinger Band. This is the lower band of the Bollinger Band. And because the S&P 500 is trading in between the lower band and the median of the Bollinger Band, this means that the S&P 500 is bearish through the Bollinger Bands, right? Now let's see what other technical indicators are saying. When we see the MACD, both MACD and the signal both are negative, bearish. MACD is less than the signal, means bearish, simple bearish. Stochastic RSI, K channel is more than the D channel, means bullish. K channel, yes, this is bullish because the K channel is more than the D channel. However, the bullish sentiments are not heavy because the K and D both are less than 50, means the bullish sentiments are not heavy. It is bullish, no doubt, but it is like it is not, you know, that heavy. It is just bullish, means the bullish sentiments are not heavy. Divergence is normal, not a problem. Divergence is not okay, it is not creating any problem. Volatility is also normal, okay, other technicals are saying it is normal. Okay, so now guys, what we have seen is that technically S&P 500, okay, on this the daily chart S&P 500, okay, S&P 500 is bullish through the Ichimoku cloud. S&P 500 is bearish or absolute bearish through the moving averages EMS. S&P 500 is bearish through the Bollinger Band. S&P 500 is bearish through the MACD. S&P 500 is bullish through the stochastic RSI. Okay, so there was, okay, this is the change because of this particular candle. Okay, as everything was like means almost bearish. Okay, now this indicates, see these the bullish sentiments through the stochastic RSI. These are not heavy, these are light bullish sentiments. Okay, so overall we are going to say that as of now the S&P 500 it is 75% bearish and 25% bullish. Simple. Okay, 75% bearish and 25% bullish. Okay, this means that as of now what we are going to do, we need to wait until the S&P 500 becomes heavily bearish or absolute bearish. Okay, so that we can go bearish, or we can wait for the S&P 500 to give some retrace to form a lower high, so that we can short sell, we can buy put option, and then a heavy fall, and we'll make a lot of money, right? Simple. This is the technical analysis of the S&P 500 on this the daily chart. Now guys, let's talk about the fifth point of the agenda, and the fifth point of our agenda is the S&P 500 fifth point of this the agenda of this S&P 500 technical analysis. Okay, that the fifth point is the probable movement of the S&P 500 from December 27th, that is Tuesday, to December 30th, that is Friday. We will see, or we are going to see, how the S&P 500 is expected to behave, is expected to move in the last week of December, last week. Okay, the closing of this the year. So guys, we are here, and this is the fifth point of the agenda, and this the fifth point of the agenda of this S&P 500 technical analysis is the probable movement of the S&P 500 in the coming week, that is the last week of the December. That is from December 27th Tuesday to December 30th Friday. And guys, when I say the probable movement of the S&P 500, this also includes the probable movement of the Dow Jones, the probable movement of the Nasdaq, and the probable movement of the entire stock market. So guys, in this the probable movement, okay, we need to understand, okay, these two things. Number one, that the S&P 500 was able to survive above the border. Secondly, okay, it is still holding, right? Other than that, when we look into this, the Dow Jones on the weekly basis, the Dow Jones, okay, it has formed a bullish candle. Secondly, the Dow Jones has closed inside the Ichimoku cloud. Okay, that is a little confusing. Okay, confusing. This is the situation. However, when we look into this, the daily chart of the Dow Jones, okay, on this the daily chart of the Dow Jones, okay, we see that in this the picture what is happening. The daily chart of the Dow Jones is saying that the Dow Jones is okay, it is still holding the technicals, okay, the same, okay, everything okay as is, that is there. Yeah, okay, there is a good news. The good news for the bears, and the good news is that now there is a confirmed crossover that has happened on Thursday in the moving averages. Because of this, the confirmed crossover, now it is also bearish. Okay, now any retrace will be an opportunity to go bearish. I repeat, any retrace will be an opportunity to go bearish. Confirmed. Okay. Now, so seeing, okay, these are candles. Okay, what it indicates that yes, there is still some possibility that the Dow Jones, okay, it can come down. Okay, it can come down. Okay, to hit, okay, again this the retest the 200-day moving average. Okay, and also this the Ichimoku cloud. Okay, there is still some possibility. Now, whether it is going to to hit the cloud here, okay, here, so that is something we need to discuss, right? So now, based on this, okay, this the movement of this the S&P 500, what we can clearly see that there is a kind of candle where the closing of the candle was almost equal to the high of the candle. At the time of closing, there were bullish sentiments in the stock market, in the S&P 500, okay, and in the Dow Jones and in the Nasdaq, right? This indicates that, see, again, guys, this is a long weekend, okay, Saturday, Sunday, Monday, okay, 3 days, okay, holidays. So this is a long weekend, okay. So whenever, okay, there comes this a long weekend, so generally, okay, we are not sure, okay, what will be the open, how the market is going, means how the S&P, how the stock market is going to behave, okay, initial movement, okay. So that thing, okay, that thing generally, okay, it cannot be confirmed. But as of now, looking into this, the closing of this, the candle, okay, it indicates that on Monday, most likely there will be the bullish sentiments in the stock market. Okay, bullish sentiments means that irrespective of any closing, we can see that the S&P 500 will try to hold above the zone of 3840, irrespective of any open. Okay, if it opens below, okay, if it opens inside the cloud below 3840, then also it can come to, okay, retest this the border, and then, okay, most likely there will be intraday retrace, and then again it will be able to close above this the 3840, the zone of 3840, because initially, okay, it is going to move up to the 3884. Okay, that is what it is trying to do. Okay, so as of now, see, initially it is going to move up to 3884, and once again 3907 is again in the picture. Okay, it can still move up to 3907, okay, before it can give up, right? So when it moves up, okay, there, then the Dow Jones at the same time, the Dow Jones, okay, again will be moving towards, okay, its moving averages, okay, and the Dow Jones will be moving, okay, towards here, okay, this particular point, that is somewhere around 33,450, I guess, 450, okay, 33,400, okay, 450 approximately. Okay, so when this the S&P 500 moves up, okay, then also this the Dow Jones, means everything, okay, it will move up. So now, okay, as of now, the Dow Jones, okay, it will try to move up to, okay, at most to 33,600, okay, 33,600, 33,600, okay, approximately here. And at the same time, the S&P 500, okay, it will try to move up to the 3907, and beyond that, we have the zone of 3937, right? So initially on Tuesday and most likely on Wednesday also, okay, Tuesday and Wednesday, okay, it depends that what will be the percentage movement, okay. If the percentage movement, it remains normal, then on Tuesday, Wednesday, okay, it can move up, okay, not a problem. Not a problem. Okay, as long as the movement is normal, it is moving up normally. Okay, that is not a problem. But if there comes a very heavy bullish candle intraday, then yes, then that can create a problem. And then either the next day, okay, or the next to next day, we can see a fall. Okay, of this a similar weight, similar size. Okay, in terms of this the percentage. Okay. So whenever okay this the S&P 500 okay it comes down, most likely the S&P 500 will come down after hitting the 3907, after hitting the 3907, okay, or if not 3907, then after hitting the zone of 3937. Okay, that is when we can expect the S&P 500 to come down. Okay, again remember this is the zone, a bit up down, okay, that's not a problem, this is the zone. Okay, it will come down. And other than that guys, okay, if we use this the Fibonacci, okay, in this the short term, then the Fibonacci states that the 61.8% is somewhere around 3970. Okay, so Fibonacci states that the 61.8% is around 3970. This means that yes, okay, if there comes okay, if there comes here heavy bullish sentiment, then yes, it can move up to 3970. Okay, 3970 will be just below this 3972 or 3971 approximately. That will be just below this the 3990. Okay, so if there comes, see, most likely the fall, the low high will be formed either at 3907, if not then the zone of 3937, if not then the 61.8%, and then this, okay, there will be this the fall, right? Whenever there comes a fall, at that time the Dow Jones, okay, Tuesday, Wednesday, Thursday, and this will be Friday. So the Dow Jones, okay, will be again holding around here, okay, around here, and this will be 33,200. So the Dow Jones will be holding, whenever there comes a downward movement, it will be holding around 33,200. Okay, so this is what we are looking for. We are looking for an opportunity. Any retrace is an opportunity. We need to see, well, where exactly the S&P 500 is struggling, at what particular level, at what particular zone the S&P 500 is struggling, and that will be our chance to enter bearish. Again, bearish, right? Okay, now other than that guys, see, the chances are less, okay, but still there are chances, because now the technicals are saying, okay, bearish. Okay, so because of these are technicals, there are chances. So whenever the S&P 500 it comes down, okay, first of all, it will be able to survive, okay, above its border. And when it breaches, when it crosses this the border, then what will happen? Then it will come down to what? It will come down, okay, to this the 3790 again. Okay, very good. Okay, very strong. Then then this is the 3760. Okay, the 3760 it will be able to hold, okay, just like, okay, last time, okay, it will be able to hold, okay, not a big deal. Below 3760 again, then the next one, okay, very strong support comes at 3710. Okay, in between this the 3760 and 3710 we have the zone of 3735. So it means the downward movement will be limited to, okay, somewhere around here. So this is exceptional. Okay, to 3710 is exceptional, to 3675 it is an exceptional movement. It will be an exceptional movement, and as soon as we see that there are two consecutive closings below the border, we are done. Means confirm bearish, go bearish. Okay, no fear, no doubt, simple. And once again guys, do not forget that as of now the S&P 500, okay, it will be coming, okay, back to 3500. Okay, where that was the level, okay, from where it was manipulated. Okay, this was a manipulated run. Okay, so S&P 500, okay, it is simply going to come down to the 3500 levels. Okay, see, this is the concept. Whenever the stock market is manipulated, whenever any index is manipulated, whenever any stock is manipulated, then sooner or later it comes back to the exact level from where it was manipulated. This means that sooner or later S&P 500 is going to come down to 3500. When I say sooner or later, that sooner or later, okay, it will be very near, like in the month of January, okay, most likely in the month of January itself. Okay, maybe like in the first or the second week of January. Okay, if everything goes, okay, normal, means if there comes, okay, nothing this exceptional, okay, this is the movement, exceptional thing, right? Means no manipulated bullish run, then yes, by this the second week of January it will hit the 3500. Okay, So that I will talk about in this the next this is the technical analysis of the S&P 500. And guys, yes, once again, if you're not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to get the daily analysis, the daily updates of the S&P 500, then you can join my YouTube community. There's the join button just below the title of this video. You can use the join button, and you can join my YouTube community, right? Yep. So guys, we were talking about this the bullish and this the bearish movement. Okay. Now, once again, okay, as of now, okay, this thing is clear that there will be initial there will be these bullish sentiments, okay, on Tuesday. Okay, see, on Tuesday, if everything okay, if everything remains okay good, if everything goes good, okay, in that case, means Asian market and the European market, see, most of these the European the Asian markets, particularly the Asian markets, okay, most of the Asian markets and some of the European markets, they will be open, okay, on Monday. Okay, see, on Monday the Nasdaq is closed, means okay, see, on Monday the New York stock exchange is closed, okay, the US stock market is closed Monday, but some of the European markets and some of okay, most of these the Asian markets are open. So if there comes this the bullish movement, okay, on Monday in the Asian and the European market, okay, then there will be this the continuation of this the bullish movement on Tuesday. This means that we can expect, okay, a gap up open, or irrespective of any open and upward movement in the American stock market. Okay, as I've discussed, first it will move towards, okay, 3884. That's not a problem. Okay, easy. Above this the 3884, then we have, okay, immediately 3907. This is where actually, okay, this is the problem. Okay, it begins. It starts, okay, at 3907 itself. Okay, now beyond 3907, okay, each and every point is a subsequent level. Okay, means it can give up, okay, from any point or from any level. Okay, then we will have to calculate, we will have to see the intensity, okay, of this the upward movement. If percentage wise, if it comes like 2%, 2.5%, 3%, this means that as of now we need to wait, okay, until it hits the 61.8% of the Fibonacci level. That will be around, okay, that will be at 3972 or 3971, okay, approximately. Okay, so we will then wait for that, and then we have 3990. It can even breach the 61.8%. okay, then this will be the level. Okay, then we can accept this as a lower high, we will short, okay, and this is it. Okay, and then we will welcome the new year, okay, as the year of recession. Okay, fall. Okay, that will happen. So it all depends that what will be the percentage movement, because this is the last week. The bullish sentiments are there. Okay, so all we care about is the percentage movement. If there comes the heavy percentage movement, then the 61.8% will come into the picture. If there is a normal percentage movement like 0.5% movement, 1% movement, etc., then the zone of 3937 is sufficient. That will form a lower high and go bearish. Okay, downward side. Okay, downward side on this, the downward side. Okay, we know that 3760. Okay, it is going to hold. Okay, it is going to hold this the entire stock market. This is the S&P 500. Okay, below 3760, then we have 3710. Okay, in between. Okay, these are the other levels. So guys, the next week, okay, it will be a little tricky. Okay, you cannot say that these are the four candles that are going to form Tuesday, Wednesday, Thursday, and Friday. These four candles will be bullish, or these four candles will be bearish. Okay, of course, okay, not these are bearish, but these four candles, okay, this will be bullish. Yes, chances are that these four candles, okay, these four candles can be bullish. Okay, but if the S&P 500 is able to achieve, okay, this is the target, okay, or form this a lower high within a day or two, then the initial one or two candles will be bullish and the other one or two candles will be heavily bearish. Okay, so we will have to look into this on this the day by day basis. Okay, this is the last week. Okay, most of the people, okay, they will not be trading. Okay, they are already, okay, on these holidays. Okay, this is the last week of the December. Okay, and bullish sentiments, market movers, market manipulators. Okay, means a lot of factors are playing, okay, there. Once again, guys, this time it is not the time to go long. It is not the time to buy. It is the time to sell. It is the time to short. Okay, and I'm not saying that that you should short here. No, wait for the retrace. 3907, 3937, 3971, 3990, or in one exceptional case 4035. That's it. Okay, any movement will be limited to 4035. That's it. Okay, nothing else. So it is okay. It is this is the same advice. Okay, I've given you here. I told you that you can short here, average out your trade, and you can make a lot of money. And many people, they have made a lot of money. Okay, in this the fall, right? So again, this retrace is an opportunity to go bearish, not bullish. This is not the time to go bullish. This is a time to plan your bearish trade. Think bearish, go bearish. Okay, for the next at least for 2 years. Okay, 2023, 2024. Okay, every retrace will be accepted, will be seen, and must be construed as an opportunity to go bearish. Any bullish retrace, right? That is what I'm talking about. Okay. So guys, once again, if you're not subscribed to the channel, then please subscribe to the channel and click on the bell notification icon. And other than that, if you want to get the daily analysis, the daily updates of the S&P 500, then you can click on the join button that is there just below the title of this video, join button. Once you click on the join button, you will be able to join my YouTube community, and you will get the daily analysis, the daily updates and the daily analysis of the S&P 500 from Monday through Friday, each and everything. If you like this video, then hit like, and if you have any question that you want to ask, then please feel free to ask. Okay, write your comments. And whenever you want to join my YouTube community, you are welcome. So guys, this was my S&P 500 weekly technical analysis for the week of December 27th, 2022. That is from December 27th, Tuesday to December 30th, Friday.